Welcome to this video presentation, How to Avoid Getting Burned in the Markets, presented by FFR Trading. In this series, we'll equip you with practical trading and investing knowledge while helping you to avoid the many pitfalls and mistakes many traders and investors make. In this week's video, we'll talk about market hucksters and warning signs. But first, let me introduce you to who we are here at FFR Trading and what our role is. FFR Trading is a due diligence firm for various investment and trading services. We've worked with dozens of traders in all markets, including stocks, options, futures, and Forex. In a nutshell, we've uncovered the mistakes so many people make when considering trading or investing strategies. Our goal is to find solid investment and trading opportunities that we can pass along to you. We hope that this video can help you avoid some of the same pitfalls many investors fall into and help provide a primer on the markets, though not a comprehensive thesis on the subject. For advanced education on the markets, we'll discuss the unlimited literature available on specific topics. Chapter 4: Market Hucksters and Warning Signs. In this chapter, we'll briefly cover some of the various ways the market hucksters will try to hustle you. Real traders and successful investors who promote themselves don't have anything to hide. They're comfortable with their losses because they know that's part of the business. Their track records show all the losses. They know their weaknesses and strengths and will readily admit both in the interest of transparency. Liar, liar? The most basic way scammers try to rip you off is by the simple act of lying. They offer completely bogus trading track records, fake testimonials, fake positive reviews, and will say or promote just about anything to separate you from your money. Some scammers hire people to write fake reviews. When you read the reviews, they'll often sound vague and lack specifics about the trading system or investment strategy in question. The grammar may also be poor. Sometimes the reviews just flat out make no sense at all. If you see dozens of these kinds of reviews, you can almost guarantee that something is amiss. Another trick scammers use is showing incomplete track records. These track records may exclude deep drawdowns or even catastrophic system failures. The bait and switch and the pump and dump. Bait and switch is another ploy. The hucksters present one track record using a certain strategy that has worked years ago, but no longer works now. After you sign up, you may receive signals based on an entirely different strategy. Pump and dump schemes are popular in the penny stock world. You receive a newsletter or email telling you that a certain stock is about to explode. The newsletter is jam-packed with images and graphs and facts about why this stock is going to the moon. Buy, buy, buy. The reality is that the scammers already own the stock themselves and are looking for naive buyers so they can exit the stock at a higher price. What typically happens is that a few months after you buy the stock, the share price drops substantially, and you either end up with a worthless asset or end up selling for a loss while your broker makes a hefty commission on the sale. The spread, the difference between the buy and sell price, is usually quite large with penny stocks. No evidence, no success. Other scammer warning signs include no track record at all, no recent track record, a track record that shows large time gaps, a track record with no losses, or a track record that covers a very short period of time. One tricky tactic is to display a track record that seems to be genuine at first, but as you study each trade individually, you realize that no human could actually execute the trades that the system generated. There might be hundreds of trades that each make a few pennies. The reality in most cases is that the broker commissions would destroy all of your profits, and you'd end up losing your money. Other common red flags include a delayed or no response to email or phone inquiries and a failure to answer even the most basic questions about the trading system or track record. Stay away from sites that have no phone number. If you do get a trading guru on the phone and begin to ask specific questions about his or her track record, they may get defensive. A common ploy is to explain away his or her track record or lack of one, by claiming he or she is now an educator. Exceptions. Before you go and write off all traders and investment gurus, please know that there are exceptions. Traders and investment gurus on the web are not always the best marketers. Sometimes their websites are just plain lousy, but not on purpose. They're busy trading and developing new trading systems. This is a good thing. In fact, sometimes a website from a trader isn't all slick with sales hype. Upon digging deeper, it's not uncommon to discover a real trader underneath it all. Legitimate traders are busy trading or trying out new systems. They don't always make time to update their website or track records or gather testimonials and solicit web reviews from happy customers. Additionally, just because a track record is new doesn't necessarily mean the system is not viable. A new system by a veteran trader is worth a serious look over a new system by a new trader any day. Lack of testimonials doesn't always mean the service is bad. Even a bad review on the web somewhere doesn't mean the service is a scam. People are emotional by nature. Sometimes expectations were simply set too high, or they traded only a couple of months but expected a yearly return right away. People might subscribe with the hopes of getting rich overnight. Maybe a company's employee was rude to a subscriber when he called in, or maybe he bought emotionally and got cold feet. The point here is to use your own discretion and don't throw out a good trading system or investment strategy because of a lame website or a lone negative review. Instead, look at the whole picture. In conclusion, know that there is still money to be made in the markets. Take it slow. Find strategies that match your unique personality. If possible, work with a trading team or at least one other person. They'll be able to see your blind spots when you can't. Above all, don't trade with money you can't afford to lose. At the end of the day, it's only money. Your family, friends, your health matter most. Aim for a balanced life. If you aren't getting some enjoyment out of trading or investing, then chances are you might be in the wrong profession. Well, thanks for joining us. We hope this video has helped you on your journey to success in the markets. If you would like to obtain your own copy of our book, How to Avoid Getting Burned in the Markets, email us at support@ffrtrading.com.